Okay, good morning, everyone. Let's take a look at what we have this morning. The first thing to say to you, yesterday was difficult in terms of taking any trades, even scalping day trades. I have a suspicion today may be similar. The patterns that we have seen up off the lows last week in the indices are far from clear, particularly in the NASDAQ. And what that would lead one to conclude is that they are more likely corrective to the upside than the start of the next move up. Typically, when you have overlapping patterns that are unclear, they are part of a corrective wave as opposed to a directional movement, which would infer we may well still see another low in the indices before we see a well, whether it be the start of the next phase up or a larger upside correction. But in any event, knowing when not to trade is as important as when to trade. So it's a case of, it's all right not to make money. It is not all right to lose money. And that can make the difference between a good year and a not such good year overall. So don't just take trades because you sat there in a trading room. If the trade setup is not there with a clear entry and a high probability, then it's not a good thing to be risking money. So just as a general overall warning. And again, when we get the first clear move off the lows, it will be obvious, and then we will get a pullback and we will know what direction that we're looking in over the medium term rather than the very short term, and that then gives us a better environment and framework to risk trades that intraday. But in the meantime, so there is last week's low, there's the move up off it. Either we are going to get some kind of messy first part of the first wave and then start to accelerate up and we're going to get this C wave, or we're going to come down another level in the indices before we see that, which would lend us towards this Alt 4 count. And then we start to move back up. I would prefer to see that personally, because what I'm not relishing the idea of is a diagonal all the way up to 3,300. Even with that much headroom above us in terms of number of S&P 500 points, as a large diagonal, it is going to be painful to track and therefore risky to trade. So it would be much preferable to see a final swoop down and then an impulse to the upside would be, if I've got a vote on these matters, which unfortunately I don't, that's where I would cast it. But if we come down the timeframes to the smaller timeframes and look at the hourly and just look at this last move down, at the moment the move up has reached the 50% retrace of this leg. So this alt where you've got a 2, 3, 4 and we get a fifth down in a diagonal is perfectly possible. We got a quite strange spike and reversal this morning into that 50% retrace, and that makes the last leg of this move up an ABC. There's no way off any of these lows that I can get a 5-wave move into that peak. So if we take out 2650 here, then I would suspect we are going to take out last week's low rather than hold a retrace against this move up. Not for certain, but that would be my expectation. Meanwhile, on the 15-minute chart, I've added the retrace fibs of this move up here. But as you can see, we could start to give this the benefit of the doubt as some sort of impulse, even an expanded flat for a 4. But that is 3 waves, that last piece. There is no 5th wave in there, and that tends to lead me even more to thinking that this entire move up off last week's low at 26.26 is corrective.